Good morning, our dear subscribers. Today, we'd like to pay your attention on probably the most important topic of nowadays in the foreign exchange market, and that's resignation of economic advisor of the United States President Gary Cohn. As you know, this man was in favor of free trade relations between the nations, and taking into account the current position of the United States administration regarding trade policy, the future trade policy of the United States. It's the fears of escalation of trade wars among the major economies, in the light of a recent decision of the United States President Donald Trump to impose new kind of tariffs on imported steel and aluminum. Of course, it does not bode well for the United States dollar, and as you could see during the last trading session, the dollar lost its steam and finally broke down again the majors, and finally also this kind of development put under the pressure the risky assets in the financial markets. As you can see, the rising risk aversion fears propped up such kind of currencies like yen and Swiss franc. The situation is the same this morning. As you can see, the majors on the rising trend at the moment. The euro dollar at 124.30. Yesterday it broke above 23.65, the first reliable resistance levels, and the clever guys should board on this kind of break. And now our main idea regarding the euro dollar is to chase the longer term downtrend, which lies today around 26.50-40. That's why this morning we slightly increased our target level in the euro dollar, and now we chase just a moment, we chase the euro dollar upper to the level of 126.40 initially. We'd like to pay your attention that of course we should keep in mind the United States trade policy. Also today is the revision of gross domestic product in the European Union, which is not a kind of very important data. Also we pay your attention on United States ADP employment figures, which is a kind of precursor against the payrolls report on this Friday. Also, the Federal Open Market Committee's members, Bostic and Dudley, should speak, but probably the most powerful idea of today's trading is to concentrate your attention on the United States trade policy and protectionist measures, and the reaction of other nations to such kind of policy with another kind of retaliation efforts. Let's see how the situation will develop in the next hours and sessions. That's why you can see that rising risk aversion brought the dollar yen lower. At the moment it's trading around 105.50-60, and the pay is under the pressure, the downside pressure. And to say the truth, next reliable support is the lows of November 2016 around 109.50. As you remember, the November 2016 and this kind of level 101.20, it was a level just before the United States President Donald Trump won his election, president election in the United States. Regarding the cable, the situation is more or less the same. The pair from one point of view is below its short-term downtrend, which lies at 39.80, and final push above this kind of trend line could accelerate the trend higher and could resume the major uptrend in the pair. But at the same time, we'd like to try a kind of short position against this level, taking into account a lot of differences, a lot of difficulties the cable has at the moment in the light of recent tough Brexit negotiation. So the dollar Swiss, because of the rising risk aversion, are under the selling pressure this morning. We sold the pair yesterday at 94.05, and now we initially target the lows of this year around 91.90. Follow our updates and follow our next report regarding the euro crosses. See you later. Bye bye.